And here we are in the live stream. Scott says, can I hear you, mate? Well, I guess you couldn't hear me on the big one. That was my intro. Welcome, ladies and gentlemen, to the greatest journey on Earth. I already welcomed Captain Kirk there, as you got to witness how wonderful. Bitcoin prices are always on a journey, and we are lucky enough to be able to take part in that. We're going to be discovering in this episode where the Bitcoin prices could be going to, where they've come from, and what if they'll be able to make up to those mid 60,000 targets that we have in mind, what the main obstacles are along the way, what does it really have to prove left now that it's made it up to the 57,000 plus region, and what would be the areas to look out for if it did indeed retrace from here towards the downside now. So let's take a look at that and a heck of a lot more. Thank you so much for joining me. Good to see you. Good to see you here, everybody. Got a bit of mic buzz on the go again. I'm sorry about that. Well, let's just hope that it gets a bit better. I've actually ordered a new mic, so things will be looking up on that front from the next stream onwards. And we'll be taking a look at Ethereum, Chainlink, Tezos, and more. So thank you so much for joining me. Welcome to the show. Let's run those clips again, those intros again, because that tune is a good one. Right. Okay, so what it is I need to put in a new source onto Streamlabs on those other scenes. How frustrating is that? I guess what we'll just do is learn the lesson, the error of those ways, and use this screen for the rest of it. This one's got good audio on it, alright. Okay, I think, let me know. Ooh, it never rains but it pours, does it, ladies and gentlemen? Okay, so here we have an exciting journey to go on, and we'll start with taking a look at Bitcoin. Thank you for all of you for joining me. I have the chat open up in a window here. I can see all of you in there. Thank you so much for joining me. Scott, Kevin, QQQ, TradeSpotting, and Dudeman who said, hey Rocky and crew, made a profitable trade this morning, did well overall this weekend, and it's certainly due to the Outcrop community. That's fantastic, so thanks so much, Dudeman. And good luck with the rest of that journey that you're on, and of course we're all on it together. Right, what have I got open up behind me at the moment? Well, this is indeed the Bitcoin chart, and we will be taking a look at a few different charts this evening. That's what the Bitcoin one looks like on the 24-hour time frame. If you want to get like a big chunk of price action on there going back throughout this all this year, all the way back to September, you can see great big uptrend that the prices are in, and we're having this little bit of discussion about whether or not we'll be able to go on up to the 60,000 region here, which we've got our eyes on, or will we actually see the prices retrace it down a wee bit, and what would be the important zones, and we'll build up a picture along the way for us, and that'll be really good for everybody no matter what level you are at trading, for getting a little bit of the old experience looking at things. So here's a couple of other charts then. You can see the same story with the great big rise up the way. You can see a slightly different story with regards to the subsequent high that we had coming in here being slightly lower on Ethereum with these lows, highs, lows here, and we're also asking questions about how we're going to be consolidating in this area, and of course we can discuss that and look at that in more detail too in the show as well. We'll also probably take a look at Chainlink and discuss this overall formation that we're in here. Again, a slight adjustment from what we're looking at. Overall upward trend, sure, but then this subsequent high that came in, not as high as the all-time high there, and then these lows looking slightly different to what we saw on Ethereum with regards to this second low coming in at around about the same area as that other low just there. And that's good because what that helps do is build up a picture of the contextual knowledge around everything that we're learning, and hopefully help speed you along the way to getting a bit more proficient at doing all of this as well. And we'll take a look at Tezos versus the USD, and if you want me to take a look at Bitcoin parents and stuff like that, drop in a super chat or something, whatever, and I'll take a look at that for you. Good to see you here, Peter. Nice to see you, my friend. It's good to have you here. So you can see then the Tezos chart, again, slightly different picture. Okay, so what we have here is, rather than what we saw on the Ethereum chart, we had a high, and so far the price hadn't taken out the high yet, and it was overall kind of triangular looking. We can see that we've had this second high, and then a series of highs coming in at the same price point with this overall upward slope down below. Again, a slight difference, and that really does cover the sort of the all of the different sort of options that things could be going on at the minute, and that's a lovely thing to have. So this is why it's kind of always worth watching all of the TA that we do, but you know, you can obviously skip around to watching whatever bit you want. If you look up in the corner all the way over to the other side of the screen, you can see the price ticker at any given time is nice and big. So if you scroll around and you're wondering what we're looking at, you can also notice that in the background there are, of course, the names of the coins that we're looking at. But there's more to be added to these charts and all the rest of it. Let's dive back onto the show. Seeing Peter Hewer saying in the comments there, a rare occurrence, a big green candle on Ethereum. Isn't it nice to see? Scott Jones saying he's a TA master, not a blimmin' sound engineer. That's right, of course, that's exactly right. I'm not here because of my audio and video production skills, although they will be getting better because I have ordered a new mic, and that'll be good. Right, cool. I always like to keep you informed as to what flavour of juice I'm drinking. Lately I've been on the peach juice. That's right, peach. Don't be misled by the bottle saying orange on the label. I actually sneakily went and filled it up with peach stuff. There you go. I make my own roads in life, you know? I tread my own path. Right, so this is the Bitcoin chart. We've got nothing on here as yet, so that's a comfortable enough proposition for everybody to no matter what level of trading you're at. If you are, of course, a trader for quite a while, there's a few things you'll have noticed about this chart so far, okay? One of which is, well, actually it's not quite visible over there on those Streamlabs. Let me just expand this out a wee bit. One of which is, as you can see now, whether or not we're in logarithmic or linear. You might have noticed that. Okay, so just a quick little point then for people who are interested in the difference. What does this affect? This affects the y-axis, that's the up axis, y is up, and you can see that it changes it from being sort of fixed number differences up to percentage changes in the numbers. So when you're looking at a difference, a candle up here which is this size, then the price movement may be greater in terms of the actual dollars that it moved between the low and the high, but the overall percentage that it moved will be the same size candle. So when you draw a line on, that's easily represented. So for instance, you know, a candle up there, when you get the mess on the chart, will expand, you know, in terms of the relative size. So what we're seeing here is that when we get a bit of volatility in this recent price action, that it's actually quite, you know, it's quite a, let me just hide all of this. What we're seeing over the last wee while is that getting quite a few big enough candles, of course, in there, whereas on the logarithmic chart it might not look quite as much like that. Interesting stuff, okay? And that of course affects a couple of different things that you'd be looking at, but that's the explanation in terms of good enough for now. Let's move on, and I'm using the logarithmic chart as it happens. Now you notice there when I switch between these views that there's a whole load of drawings and whatnot on there. That can express the movement of the price in a whole bunch of different ways, and we'll get around to talking about all of that for just now. But what we can see here is that we've got a whole series of higher lows overall, which is nice to to see a whole series of higher highs. And if there is a key area to look to then in terms of this chart, the 24-hour one, it's going to be at these highs, right? So we've got 1, 2 and 3 highs here. I think that's fair enough in terms of debating about it. Now this makes things a little bit easier for you, because when you're new to charting especially, what you'll find is that people talk about the highs and the lows, and it's sometimes a little bit hard to identify. Well, don't make it any harder on yourself than just this. Just zoom out a little bit and look, and you can see 1, 2, 3, those are the 3 highs, right? You could zoom in a wee bit and try and make some sorts of debates about things, and you'd be thinking to yourself, okay, so is it this high or this high? What's the high, etc.? And you can see how that can be done quite easily to yourself, but if you just zoom on out again and look at things seriously, that's the 3 highs. So what do we want to look at then in comparison? Let's make things a little bit complicated, but I'm sure you're following along with me quite easily. Let's take a look at one of these oscillators down below today. We'll try and not go too overboard with regards to anything. If everybody wants me to look at anything more specific, then give me a shout. Okay, just give me a shout. So what one of these 3 shall we give the spotlight today? Perhaps we'll give it to the stochastics, just because they never ever get a look in, right? So you can see I've got an indicator open down below here for us, and these lines oscillate along for us between the extreme high point of 100 and extreme low point of 0, and anywhere where they're between the sort of 80 and 20 area in terms of these numbers that are coming through from the calculations it makes, then you can see it's in the sort of the main area of where we expect it to be for the majority of time. When it's in one of these really high areas beyond that zone, then you can see that's an extremely bullish situation for the price action to be in. Okay, just don't need to overthink it. That's obviously the prices must be doing really well here, because it's all just woof, way up. All the numbers coming back are like, you're looking at it going, that's a big number, Doc. That's what's going on up there, right? Then down in these areas, likewise, you can see that's very, very bearish zone, right? And that's good enough for that. Now, what these zones are also called is overbought and oversold. And the reason for that is because kind of the implication of what goes up must come down, what goes down must come up, etc. But why did I talk about the other way around first off? Well, because that's actually the best way to think about it. Just don't put too much stock in a name and anything in terms of trading. Now, this is formed by looking at the differences in terms of the recent candle sizes. Okay, it's formed using a calculation that we'll not go into in detail here. Suffice it to say that it's a measurement of in terms of one way of looking at it is the sort of strength that's in the market at any given time. By looking at the sort of the enthusiasm, if you like, if you want to, whatever sort of soft word you want to use to kind of describe this thing, by looking at the size of the candles that are getting put in here and the ranges that we're putting in, etc., and that gets translated into here in terms of an expression of a number between somewhere 1 and 100, and it looks at an average of them over time. And then on top of that, we have an average as well built in. So these 2 lines, the yellow one is the stochastics line itself, and the one that changes color there, determined by, in terms of how I programmed this thing, it's slope, so sloping up, positive, sloping down, negative, blue and red for them respectively. Then you can see that gives you an indication of the strength of the trend in the market, right? So what we're looking at here is that we're coming towards the middle line of this thing, so that's obviously speaks something for itself, speaks volumes. We're at the middle point, and the middle point is of course one of these areas which could be one of those prime turnaround areas. Now, it doesn't get a glorious name along the lines of the overbought or oversold territory, not always, but then again there's kind of more thinking on that. So what you can say about things is that when they've spent a period of time up in an overbought territory, then actually anything down below the sort of 30 point, 40, 30 is actually kind of starting to get into that oversold territory already, or indeed quite bearish territory already. Likewise, in this sense, you know, there'd be quite bullish territory, but we haven't spent any great deal of time down here. And why haven't we? It's because we're actually trending towards the top side, as you can see with the extended periods towards the top side. Okay, cool. So now you're up to speed with an oscillator, and what we can do is we can look and say, what can we take from this? Now we can go just on that light area, and we've covered quite a lot of that already with regards to how it's pointing towards the top side and we're above this moving average, which is good because the recentness of it is saying it's better than the historical past in relation to itself, and that's good. So we're moving towards the top side, and we've just made it past the neutral line, but we're waiting for that moving average to push on past as well, and for us to really confirm and push on up the way. So maybe there's something to be thought about in this area in terms of like, well, there's a danger here as we've identified in the past with the inflections that you see around there, and maybe then the price action warrants more scrutiny. Okie dokie. So then, so what else can we say about this thing? We've covered the sort of slope of it, and we've covered the thing. We could look at this and say that there's also the opportunity to talk about patterns as well. And you can see that there's this downward sloping line here, for example, on the stochastics, and this is giving us an idea of this kind of underlying trend, perhaps drawing our eye to something. We're saying, we're coming down the way here, and actually every time that we do so, we come quite a wee bit lower. So maybe that's something to think about, the implications of failure in this area, perhaps, right? Okay, because then perhaps, if this did result in coming into one of those, that notion of being actually in that overbought-ish type area, and the prices returned here and spent a bit longer than these recent times that they have done down here, etc., then that's how that would play out. And then, of course, towards the top side, what do we see? Well, we can see that these highs were coming in higher than the previous highs, but just here it's kind of a little bit flat. So we have this sort of lack of pushing up the way overall, and that gives you the overall structure that we're looking at there on that one, which is kind of interesting given that we did have higher highs in price action. So we were due maybe to see something kind of, give us a little bit of a retrace at that point, and that's maybe when things, kicked in. So how far of a retrace did we ultimately get? And we actually retraced 50% of the movement that we had towards the top side. You could just kind of take that, you can eyeball that more or less here by seeing that we are on the logarithmic chart, for instance, and they come down halfway, 50% there on that one. And now we've moved up again, and we're at this key area where we had our previous high before as well. So you can then start to kind of build up a bit of structure around this, and then really kind of identify the obstacles that we would have in the way. So we already know that the stochastics are going up, that we want to see things going up, and that the price action itself has indeed been moving towards the top side. And we can see that we've had these higher lows overall, and every time the price has come in to put in one of these lows, it's actually tried harder than it had in all the previous times, and the price action hasn't gone any lower. It's never pushed past 50% all three of these times, giving you a real sort of actuals when you look at this and think, this is a sort of negative underlying trend that's going on here. But what effect it's having on the price action, to bring that story full circle, is to see that it's not actually pushing the price down any further, or even coming in to retry these lows. So maybe that's actually showing you the weakness behind that bearish endeavor, and perhaps this is a decent enough thing to have then had an opportunity for us to move down the way. Let's looking at where we are right now, we have just gone past the neutral line, so we would need to push up quite a bit more in price to actually come in and be higher than our previous high overall. So the target for us needs to then be quite high, up towards the mid and high 60,000s, to actually come in here and not have a failure at some point to do, and that should start to look like, oh, okay, we can't actually push any higher in this, and that we're running out of momentum. So that's why that target needs to happen. Okay. It's a slightly counterintuitive point, I suppose, but there's a lot of space here for us to go up. That's a good thing. We really do need to take advantage of that, though, and that involves pushing up at least to past this previous high at 61,000, 62,000, but actually on beyond there another 10% perhaps up towards the 69,690 lulls number, but also proper serious target as well. So let's try and then say, well, if that's our target, that needs to be our target, just to sort of satisfy that area. That's good enough for us in terms of percentage movement. It's great, fantastic. We have a target in mind already, based on not only the price action itself and where we are in relation to where we've come from, but also in terms of where we are in relation to our overall highs, and the structure of this in terms of the strength of it, looking at an oscillator down below as well. So we've got a pretty good picture of how things are evolving so far, and that's pretty good. You've gone from just like not really necessarily having much of a picture to having quite a broad picture of the price action, and able to make a sort of fairly decent statement to say, okay, we can assert some bullishness about this, and we have and we've obviously experienced quite a good degree of that so far today. How far can we go on? Where's our main obstacles after this? And of course, then what prices will we need to see support us, so they don't like have some wee trapdoor effect and let us drop down below? Let's try and establish that. We'll do that with a little bit by kind of looking at the detail here a little bit more in terms of the price action. Boom, just like that, or something like it. Let's try and just take a wee historical historical look back the way and make sense of some of this journey that we've been on. So we came up towards the top side, great move up the way, and then the prices entered into this formation just here, and we drew a downward sloping yellow line, this downward sloping yellow line at the lower end of it to sandwich it in there. It's a lovely pizza slice shape, and the measured move off of that was measurable from the high to the low over there, and we actually took that out and then some and came in for another pizza slice, but this one was pointing towards the top side this time instead of pointing down the way. And you would maybe think, okay, something negative could happen here, but actually the overall bullish swell in the market had taken us to a point where we could actually achieve an upside breakout going with the trend on this one against the statistical likelihood. Came up perfectly, took that move back down the way again. And where did we find support at? Well, it's actually 50% retrace of the move towards the top side here, and then we continued on up. Okay, so that's what all that noise is in the background, and so far it's taken us up to this area, which ultimately has led to a degree of downward consolidation. And we talked about this during a price what do I mean by consolidation? Well, I mean from the broader point of view, you can see that we're operating within the overall scope of this range, as opposed to broadening out the way and expansive in terms of the elongation of the price, if you like, you know. So that would be the how that word makes sense. And so far then, what it led to was us being able to say that you could have this move on the charts. This is what we were talking about last Friday, and the overall, the price actions come all the way up towards the high that we spoke about as being a profit taking target. So we did already anticipate this. Now, this is relying on past information at this point, I suppose. So if you weren't watching those previous episodes, how could we make those sorts of assertions? And what we were saying was, well, there's a few things. If we measure from the high to the low during this movement down the way using Fibonacci's, then this was coming in at around about the 618 golden pocket retrace for that, which is a typical area to see things oscillate between in terms of the natural harmonics and markets that you see. Why this sort of pattern is familiar to you, if you like, in terms of having seen this sort of thing on charts a million times. Well, that's the basis of that from a mathematical point of view. And also when we were looking at the low over here up to the high there, that's where the 236 is coming in at as well, and that was lining up with the 618, giving you that double confluence of an area to be aware of in terms of its significance. The overall pattern that this could have been was a wedge of some sort, or triangle, which had a breakout and a fake out territory, and we were aware of the confluence of the fake out territory over here by looking towards the left, where our previous high was on a smaller term time frame. So that's also all happened exactly as it was, and as we'd spoken about, and that's where we got that move saying that beyond this zone, the risk profile of that trade changes to a different landscape. Okay, because what you're doing here is you're trading within the range, and you're taking up to the likeliest area of profit taken by bigger players in the market. It's a smart money move, and this has the lowest risk profile on it as the current standing of a trade compared to all of the areas up above beyond this zone, until such, because this changes outside of the risk profile of this trade onto a new landscape. And that's where we are right now, just kind of sitting on the fence looking over there and saying, well, what do you think, guys? Is the grass greener over there or not? Shall we just frolic and dip our toes in there, or shall we actually push on up the way? And looking over towards the left and saying, well, if we don't actually successfully close up above there, we haven't taken out our previous high in this area. Is that a risk or not? Well, we've already looked at all of this from the 24-hour time frame. How about we try and answer that question right there by diving down a time frame to the 4 hours and looking at the structure of this movement down the way and seeing how that kind of pans out. Let's do that just real quick here and say, okay, 4 hour time frame, got these lows moving down the way. Did we have anything? Well, looking at these previous two lows here in the stochastics, you can see that we didn't actually, the momentum wasn't there to carry us any further down there, but the price action itself did go right down to that zone. Perfect. Okay, that was the clear area that we'd identified previously as being necessary for support, and the prices went right to that zone, but they didn't push on the way, and they didn't have the momentum or the sort of the attitude really to do it, even though they went right to that target. Fantastic. So they went there, decided that even though they were at the dance and it was the best, most romantic night of the year, that he just didn't have the guts to try and kiss the girl in the end, and that's how that one panned out. So then we've seen them come up here, and we've had this area of consolidation, just, you know, a little bit. So could this potentially be some sort of bull flag for us or not? Well, what would it really add up to being? Well, we've got a high just here and a high just here, and that looks a little bit like it's also got a touch of that bearish divergence in the way that this had bullish divergence. That's what that's called when you notice that dynamic between the lows and the prices getting down towards that lower target you had in mind, but the momentum just flagging off the way and decided not to follow through. Same way when you see this upper side target that we had in mind here, and the prices then decided not to follow through, right? Same stuff that we're seeing just there. So that builds up a picture for you. We had a bit of bearish divergence, and then the prices then resultingly twisted around here in the terms of stochastics, and we're looking like maybe we could come in here and try and test off of the edge of the extremely bullish zone. So what does that mean? Well, if we push on past here and actually do and allow the prices to really push up the way, then perhaps, and we take out one of these areas just over here, then perhaps, you know, we could actually see this extend for a bit longer and come in for a higher target, or perhaps maybe we need to have a retracement from here. One of those two dynamics. So how would that maybe work for us? Let's just take a look down here at the 1 hour time frame here, for example, and say, in terms of this most recent structure, then if this is a sort of flag, what kind of flag could this be? Well, if we're just kind of looking at it from this point of view and saying that maybe, you know, maybe we've got the potential to measure something along these lines, and we want to take it and say that there's, you know, this will be very generous with this, right? We'll be very, very generous with this, but we'll say, where could this potential next move take us to overall? Then we could be looking up to where that is exactly lining up with our previous highs. It's not exactly, but you get the idea. This consolidation period could be just a ticket to take us all the way up towards those previous highs over there as well. So that could be our next target, and that would kind of coincide with the price action if we're able to overcome that first obstacle of, you know, really pushing on past this zone overall towards the top side. And how will we know that we're in danger of not succeeding in that regard? We'll take in a measurement from the low to the high, and we can find a key area for us, and that lines up here. It's the 236 Fibonacci point. You heard me say that number earlier on. That's a key number for us. If you were to only know 3, you could be 236, 50, and 618 would be enough for you to get by for a wee while. So in terms of the measurement here, what we're looking at is the 236 coming in at 56,500. So that's where that is. And what does it line up with quite neatly? Well, that 236 zone over here that we already pushed up past. We already spoke about this in the 4 hour time frame. So we know that if the bear flag extends on down past this zone, we're really asking different sorts of questions there, because the dynamic will have changed. The profile, the map that we're looking at in detail here will have changed, you know. So we can know the broad picture, we know the small picture here. That's us kind of having discovered that really just there now. Brief review of that, because you might not have heard me saying that 56,500 area therefore is the sort of when the context of this zoomed in picture changes, and of course then the target towards the top side could be sort of 61,400 area if you wanted to. And then on the 4 hour time frame, then we take that back up the way and say, well, okay, so that takes us up towards this zone. Then of course we're coming in here, maybe we're able to push on past, I would expect so, in terms of this divergence that we're seeing on the 4 hour time frame. That's the next obstacle. Are we able to do that to then continue the story going up the way? You know, that overcoming that could take many forms. One of the ways that we're seeing overcoming that taking one form is this period of consolidation at a key area in terms of the support and resistance. That's a key fingerprint signature of this happening, is to give us the best opportunity to succeed in that mission, is a way of achieving that, is that story that we're seeing unfold just there in the price action, which then can carry on up the way, taking us back towards the 24 hour time frame and saying, really, well, in at this point, this is when we need to start really saying, okay, hammer home time, right? Because if we can come up towards the top end, then fantastic. Pushing up the way goes in hand with what we're seeing in terms of the momentum with the stochastics right now. It would need to go past this fake out territory we've just been speaking about with a bit of momentum to carry us up towards that 61,500 area. If it can do so, then we're in line to come in here with bearish divergence and then have a subsequent retrace down the way, or in line to push on up after. If we were to do such a thing, how would that look? Well, perhaps overall we'd be inside this kind of wedge we spoke about. We spoke about the fingerprint of this last week on Monday, I believe, with the regards to all the Fibonacci stuff, and it was a nice lesson there as well. Well, this is again an expression of the fingerprint of just this area here at the very end that we've been looking at really overall. Okay, this is a lovely detailed analysis, I suppose, of exactly how you could more or less expect the markets to perform within all of the road mapped areas for us so far. It's quite good that we've come here with a decent enough understanding, and a couple of little things missing from this analysis so far, such as looking at volume, etc., which is going to be something that I bring up in just a second here. But what could look like is coming up towards this 69,000 area. This is 68,000-ish, whatever, towards the top side of this thing, and taking in one of these three Fibonacci areas up above, the 1212, the 1414, the 1618, and they come in at between 70,000, 65,000 and 61,500. So this is the likelihood, the three likely targets towards the top side for anybody trading this right now. I'm not a financial advisor, none of this financial advice, by the way. Always do your own research, but this is where the price is going if we continue to do exactly what I described in the 1 hour time frame. So this takes you right through to tomorrow easily, and then for the live stream on Wednesday with full knowledge of where we're going. If something different happens, ask me in the Discord and we'll talk about the new fingerprint that it's showing. But this would be taking up towards that zone right over there, and then it comes in and asks the question, can we push on up the way? Can we get our magic number of $69,420 here on Bitcoin pricing, or will we be looking at a potential sort of bit of consolidation and retrace around those areas? How will we be handling the divergence at that stage? You know, would we have the bearish divergence there saying to us, well, maybe we need to extend this out a bit and this is going to continue on, etc., etc., like we've spoken about for the last wee while. Okay, so that takes us up to where, you know, you would really need to know then what was missing, you know, when we've talked about it. Well, the volume, do we see decent volume to go inside with all of this chat that we've had so far? 24-hour time frame, you can see we're coming towards the end of the day. Nice volume candle on the day. We're looking for the follow through. What time is right now? Towards 9:30 UK time, so another sort of 4 hours left on the day. So we've had that nice day so far. Let's see if we can get that to finish, follow through. You can see I've actually got 3.5 hours left in the day because I've got it showing me on the left hand side of the charts there. I just had to, but I always look at my watch and whatever. Then 4 hour time frame here. You know, you want to see that follow through being represented here with a nice move outside of that bear flag, or potentially not. And we're seeing a nice volume candle coming in here on this 4 hour time frame, bringing us up the way. But then of course last wee while in this flag period, the diminished volume. Okay, that's nice. That adds up to the fingerprint that we're seeing here on the 24 hour time frame of coming up, hitting off of our average in terms of the volume, and saying that we've done what we needed to do with what the bullets that we had. You know, let's not go crazy for just a second, let the barrels cool down, and then of course we can resume firing again if we so desire. Of course, the smart money is also looking at that area that we spoke about and saying that movements towards the downside and failure of all of this overall zone of course leads to a sort of catastrophic cascade in price action towards the downside, which could take the prices of course going in more or less equal numbers towards the downside. But we'll not talk about that in too much detail. 3.99 coming in from Scott Jones. Thank you so much, buddy. That's fantastic. That's fan-dabby-dozy. Cool. So let's see how you've been getting on in the chatter, and we'll go through the other coins now. We're not going to go into it in the extreme detail that we just did in terms of the Bitcoin price action, but wasn't that a good lesson? Way. Thanks, Scott, man. So wasn't that a good lesson? Did you learn anything? What do you think? Let me know in the comments down below as well if you're watching this after the fact, this episode. Everybody that's watching along, please drop a like on this. It would be really appreciated. It helps other people find it. I do believe that there's a degree of quality in the video that I'm putting out here, and I hope that if you think that's the same thing, then it wouldn't be beyond your, you wouldn't be ashamed to go onto your social media and share it. I hope that I'm a fairly decent representation of what you like to watch on YouTube, and you would be happy to share that in public. So go ahead and do that. Hit that share button if you so desire. It would certainly help the channel out, I imagine, quite a bit. And yeah, so cool catching up with you in the chat here for a split second. Hi Peter, how you doing? Good to see you there, my friend. Nice to see you, Kevin, as well. Let's see, Peter here is saying, I don't think we'll reach 60k in the short term, low volume, the market is weak. Okay, cool. That's us in the short term. You know, if we, I mean, that's just the targets, right? I could have gone down and broken it down a bit further than that, but it's all good. Peter's fine, and it's good actually. He's probably got a pretty good opinion about it too. Nice one. Hit the mic, Rocky. Get in feedback. Okay, there. Tried that one. Probably hit it a few times since though. I just messaged this in the Discord. Email 30 minutes ago saying they stole your crypto. So they stole your crypto. Oh, but you're getting it back, hopefully. That's fantastic news. Oh, excellent. Thanks very much, Julian. My friend, you're already a Patreon, so I'm guessing that's a delayed message or something like that. By the way, quick reminder to me though, if you do want to help support this channel, then liking and sharing is of course the most accessible way of doing it. I really do appreciate it, genuinely do. You know, I'm a heartfelt guy here. I'm honest as well. I mean it. I really do genuinely appreciate anybody who does any of that. But then, you know, check it out. You can also do what Julian's done for us here and help support the channel by joining up on Patreon, and I really massively appreciate that as well. Hugely. Means a great deal. Thank you so much for that. So cheers, Julian, and anybody else who considers that sort of action. Randy, what is that coming out of your hat? Hair? Yeah, it's hair. I decided to let the hair down this evening, ladies and gentlemen. So yeah, luscious locks over here. Then I've got this on for colour, mostly for colour. I'm going for a nice sort of colourful scheme today. I hope you like it. I thought when the old colour changing lamp in the background wasn't working, I decided that what I would do is stick on colourful clothes instead. Makes up for it, doesn't it? Right? That's great. Much learning. Many thanks, said Scott. Fantastic. Good one. I did have you in mind a wee bit when I was doing that, Scott, so hopefully then, yeah, that might have sped up. That might have been that single half an hour sort of tutorial, I guess, that we went through there. It was a tutorial for the current price action, how to do it, you know, using a couple of tools to your advantage, and kind of at the end confirming it with a bit of volume, etc. Now, of course, you know, it's kind of like Peter said, there's definitely many ways to skin a cat, and there'd be and that was me following along a thread that I started pulling, you know, and I built a case for it. I'm not actually taking a trade off of what I'm talking about right here, right now. I think all of you should probably do your own financial advice, you know, and I say this often as well, you know, it's like I really do trust and believe in every single last one of you out there at being able to get really good at doing all this yourself, and of course I'm your spirit guide along the way, and I like to tell people that, you know, teach a man to fish, he can start waging the war on the fish. That Terry Pratchett one's a really good one though as well, of course. Teach a man how to light a fire, he can keep himself warm for the rest of the night. Set a man on fire and he'll stay warm for the rest of his life. Cool, nice one, Randy. Good one. Part of the long hair crew, keeping it real, ladies and gents. Right, so that's us covered that, right? Is there anything then that we can kind of learn from that, take it through a bit of osmosis, right? We know concepts such as there's this thing called patterns out there, and one of them is like could be a triangular type shape, and yeah, you guessed right. This sort of sideways triangle is kind of like the equilateral triangle, and then it is equal in terms of its statistical likelihood for breaking towards the top side or the downside, or so say they. But of course, what you also have to bear in mind is your overall propensity to break in line of the prior trend, and the prior trend on this one is a very clear and obvious upside trend. We're not talking about a triangle that's happening within the overall schema of a larger consolidation. No, we're talking about one that's happening at all-time highs on an asset that's been trending towards the top side for over a year, right? Nice one. Well, that summarizes that. So what we have in terms of this movement here is weak volume, as Peter said, really, when you look at the schema overall. By the way, that was kind of worth pointing out, I suppose, as well, in terms of the Bitcoin price action, that, you know, while we've had this and that kind of has brought us to where we are right now, we did talk about the inherent sort of weakness that we would need to stay above lines, and we're being quite tight on that, you'll have noticed as well. You see, like, that's the implicit thing. This is like why I say when I do the TA here, it takes you like 97% of the way towards where you need to go. But like the sort of the astute amongst you would have thought to yourself, well, where could it go next? Rocky spoke about that a few times, and he actually kind of left that out of the episode. Well, I mean, that's it. I mean, that's your 5% right there, right? I mean, if you can answer that one missing paragraph from the episode, then well, you know, 60 seconds, Rudyard Kipling, all that sort of stuff, whatever it was, you know, set a man on fire, etc. So what do we have? What do we have to look at here? Right, let's move on. Pattern triangle. Could we break out from it? Sure, maybe we could. The volume here, not exactly setting the heather on fire. Could we come back down and retrace it? That'd be wise. If you want to know where it retraces, check out TradeSpotting's channel. He's got a video on retraces. You'll also find it in my education playlist if you want to know where that would be. It might be an easy place for you to spot it. We had this previously. There's a bit of a head and shoulders in here. You can see if I hide the charts, there's a bit of a pattern here. You've got a shoulder, a head, a shoulder. The movement down the way represented the distance between the neckline, if you like, and the top of the head, if you can imagine that in that shape there, and then and took us all the way down for that full measured move. Woohoo! Where we've come from since then, of course, is just up towards the right hand shoulder, giving you a really kind of nice, neat package description of the potential sort of support and resistance in here. That's why I represented this exact price area here in Ethereum in terms of looking at this head and shoulders here, because that does more than just describe the pattern that happened in the past. It describes the area here in terms of its liquidity and the psychology that we had operating in this area previously. And then, of course, if we carry that story onwards, we can see that this is also a previous high that was then extended on beyond for a last sort of gasp move. And in between times, we saw that the prices then wicked down here in this big indecision candle at the top of that range, right down to where the prices are now. So this kind of underlines, broadening again and again, our understanding of this area in terms of its kind of overall requirement to be broken. Now, when we put the drawings back on here for a second and take a look at that and say triangle, if I just jump on over towards, where was it that we saw the other way around? Yeah, over here towards, say, Tezos, for instance. What are these drawings like at the minute? Okay, so a bit much on that front. What we can see here is that there's this equal tops. You know, we've got these equal tops. If this starts happening on Ethereum, then what we're looking at would be like an ascending triangle formation in this area of it, having broken past, in terms of the upward movement, the downward sloping area that would have been this as a triangle. Okay, so that's what that would be with those green lines for you. And then, of course, if it was an ascending triangle, what I mean is in this zone here on the right hand side of this chunk here would be like an ascending triangle. The measured move off of that, and how you do these things, is you look between the biggest range part of it, which is actually valid, and that would be over here. You're looking at the difference between 450 and 326, so that's 126 towards the top side, and that would take you in here, that 569 target, you know, boom, bish bash bosh. That's how you do that jazz. And what we're looking at here then in terms of Ethereum is, well, where would we have to go to actually achieve that storyline? And that actually comes up towards the high here, putting an overall ascending triangle if we get a triple top at our highs. Okay, that would be quite something to bear witness to, bringing in a Fibonacci retracement from the lows up to the highs that we most recently got, and bearing in mind then that the 50% area here is where we saw the bodies closing at on this chart. We can say that perhaps, you know, between these two areas we've got a cup with handle formation. So this is another type of pattern, and this would be your cup here, and this would be your handle. It's not very fantastic, but there you go. And what would that be? Well, that means that you'd be quite inclined to perhaps buy into that absurd notion of buying top for another solid 12% move happily up there towards 2,200 if that were to be the case. Pushing past this potential area for us, calling it about you call it that World War II zone, and thinking about it in terms of the date, it would be about that 1950s area, 1945 perhaps, and thinking about it, how is that going to go? Like, what sort of post-war era Ethereum are you looking for in this area? What you're looking for is an immediate return to prosperity, and of course, towards the top side, if you like, and that would be great, fantastic. But of course, maybe we if we come up here and then don't push on past with that experience, then you can imagine then, sort of from a psychological point of view, the fatigue that you'd be feeling in it around about that area just there. It might be worth, just kind of standing back for a second and waiting to see how things go, maybe offering you up and in another decent bite of the cherry and extending this out the way towards the right hand side, taking us into April with the same sort of scenario. Okay, that could happen, but what we're looking for is just to kind of move up prior to that, and that would make sense from a point of view, for instance, just a pattern fulfillment type of idea. We're right there at the typical point for where you would break out, for instance, on that one. Got a ways to go here in terms of this being an ascending triangle if it wants to continue on the way and take us into mid-April. But if we have the cup with handles thing panning out the way, then of course that happens sooner as well. So you can see the evolution of the charts, that would carry you forwards there. You can imagine the same sort of scenario yourself. Obviously, I'm doing this at a fairly complex level, high enough sort of degree. However, you can absolutely achieve similar results yourself. Join the Patreon, I'll support you to get towards those goals, absolutely. But what we're looking at here, as well as having had the fulfillment of our sort of our move before, as we described in here, come in and found support at that area perfectly. Now these drawings that were all done on here in the past, well, of course, when you're at first glance, looks a little bit kind of overwhelming perhaps to the newer viewer. Hopefully you've been sort of somewhat desensitized, I'd prefer to say educated or enlightened perhaps, in terms of all of this stuff, and you can see between the lines a bit clearer, etc. Hopefully, if it's a bit noisy for you and you ever want me to repeat anything, drop a comment in there and let me know. But yeah, you can see this. You can see the detail now. Hopefully, at least right now. Now I know that it kind of becomes a struggle again whenever you have to go then back to your own charts and you're looking at things, and it all looks ever so slightly different to what I was talking about. And you're like, how does that all fit in? Now, just bear with yourself, have patience. You'll get there in the end. Right. Do I need to go into any more detail on this one? I don't think I do. I think in terms of the lesson at the start and then the setup here, in terms of talking about things, there's quite a lot that we've covered. I suppose maybe I'll just advance it out a little bit by showing you the overall, in terms of Peter Hewer's chat there, the overall decline in weakness in the volume. And then again, I suppose that does underpin the point that if we did get a volume candle coming in here that was twice the size, that would obviously be quite noticeable for a number of reasons, one of which would be breaking outside of that sort of overall downward sloping volume. As you can see, it's quite distinct and it goes back the entire upward market, right? Okay, so that's what you get at these areas. We need to have an injection in here. It's not the first time that we've seen something like this. Just zooming on in the way and giving everybody a reminder that you see things like this throughout periods in the market. Then you need to, of course, get a kick towards the top side, big decline in volume throughout this period just over here, and then of course you're looking for good things to keep coming in this overall period, which has led to this sideways consolidation, which is the first time we've really seen something like this for a few months now, quite a number of months in terms of the markets. Then of course we did see this massive decline in the volume, and that's the overall hesitancy of everybody to get involved. And what do you do? Well, you just use risk management. Like I had that position on there. Instead he said simple, manage your risk, boom, there you go, you're in the game. You're in the game. Okay, perhaps there's a few things that we overlooked there in terms of looking at oscillators and such, but I would like to point out that when you're consolidating, you're not really trending, and therefore looking at oscillators is somewhat misleading. What we have here in terms of the chain-link chart is, and thanks very much for joining me, by the way, and in this story what we're looking at right now is of course the protagonist being Chainlink, and it's on a journey. It's like Frodo and Sam, I'll carry you Chainlink. Chainlink's nah, F off, Sam, I'm taking my heroin ring over here. And what we could be looking at here is, can we make it to Mordor up here at $36 or so? Is that possible? And does the story stop there? Does the price action run out from the back behind us and grab the ring and jump into that big volcano thing, whatever, ask a nerd, and then burn up, or whatever happened after that? or does it actually manage to go towards the top side thereafter? This is the big story. This area right here is going to be, of course, of key note for us. Why is that? Really, it's our past highs, and there's a number of different ways of expressing these things, and an easy way of doing that is by going on to, I'll just actually dive up to a higher term time frame just here, just now, and hide all the drawings and bring on one of these other things just to give a little lesson for us, is the Donchin channels, and that's a nice easy way of identifying these key zones for us. So of course the last time that Gollum had a chance of running out from behind the Hobbit thing was over here, you know, when we put in those highs on the 16th of August at $20, things looked like something, you know, like whew, that's maybe it, you know. Come December time, prices back down at $11, not doing so great, but nice recovery, blah blah blah. Anyway, we pushed on up the way, fantastic, great to see that having happened after a period of consolidation. We're still looking for the same sort of overall outcome here. Now they could draw in everything that we've already got drawn on the charts, just as we have there. It describes the same notions. As you can see here, there's the 50% line. Now this line shows you the 50% high between the high and the low, as we're seeing on this channel. The top line of this is marked off by the highest point within the last 26 periods. This is a 3-day time frame, so that's taking us back 80 something days. Looking here, then this is likewise towards the downside there, and this is a story about having had that 50% retrace. From a Dow theory point of view, if you've ever heard of Dow, or think you haven't, you have, because of the old Dow Jones Industrial Average, etc. So that guy Dow, he said things go back 50% loads of times. Now we actually have gone on beyond that and now moving towards the top side. So the overall importance then of taking out that zone is what's really cleared for us. And if we do that, then things obviously get very stinky beyond beliefy, and of course we're looking up towards these high numbers, and it's quite easy to see. That's the linear chart. Stick it on logarithmic again. For some reason I took it off linear earlier on and then seemingly forgot that I'd done that. So yeah, looking towards looking up the way and just seeing what's kind of typical with regards to the charts here. You can see that broad movements are quite typical. So this is a retrace overall here, and you can see that maybe we've not experienced the true pain of this quite yet. And what would be the true pain? And that would be going all the way back down to 14, etc., that we spoke about the other day. Now, does that have to happen? Certainly doesn't. The volume is diminished so much here already that we're kind of primed for a move one way or the other. If we did break down outside of this towards the downside, where we would be actually be going, that would be looking, you know, you could be looking towards that 14 area that we spoke about, and that comes in with a golden pocket retrace for us off the overall trend towards the top side. You know, that's pretty horrifying. But we're above the 382 at the minute, and we're just here at the edge of this consolidation zone. If we need to go on for a few more days, whatevs, bro. But if we actually do break out past this zone, we're looking towards that mid 28 zone. Actually, let's call it 29 just to make it concise, because that's the 236, and that's pretty good. There's these two heartbeats we need to get past here as well, because of their they indicate the couple of fake out territory zones for us, and really until such times as we pushed it past $32, we've not actually broken the back of the challenge towards 37, and I know that leaves you with just shy of 10% towards the top side thereafter, but there's trading to be had in 10% moves, believe me. And we're actually looking at then that's that series of 10% moves from here to the next target, to the next target, to the next target, really essentially on this one, as we've been talking about recently. So we've come up towards our most recent set of targets. Lovely, seen the pullback directly off of where we'd drawn this area in at. That's to be expected, of course. Right on at 236 as well, hitting it to the penny. So, you know, trading that one almost like a sort of sniper. I don't like that implication, though. Everything operates in zones. You can see though that there's just been a degree of sort of success recently with regards to that movement. I'm not particularly pleased to have seen that, though. I would have much rather seen it push on past there, but of course with this overall diminishing volume, then that might not be about to happen in the immediacy. Was there, of course, a medicine to be swallowed in terms of the recent upward rise? This movement here, no. In terms of the previous high, yeah, so we had that bearish divergence, so we got this pullback again, and it's resulted in a bit of sideways price action. That's what's been going on here with this one. So, you know, while you're in a trend, the trend on this side of the macro is obviously a bullish one. So I've laid it all out for you. Again, the fingerprints are right there. You know your exact levels. If you want more detail on them, let me know. areas of potential sort of finding our feet in. If we do actually push on down past this zone, we'll of course come in there at $22. That would be your best buying area if you're looking for a sort of quick response, sort of triple your account in a day style jazz. If you're mental like and using high leverage, then that would be your area to look to. Of course, then trading within this range is fairly sensible. Looking at this point and saying that we've come here to a stage where we could actually start to extend out the way is quite clear. In terms of going back down towards the 4-hour time frame, though, we obviously do have the ability to test a couple of key areas. For instance, 27.6 would be easy to revisit after having visited 29.5. So look at it for that. When I talk about breaking areas, I don't just mean like coming up and then sort of like touching them and running off again. Talking about because that's what so often happens, as we saw earlier on. What we're talking about is a series of candles above those price points, right? And Tezos then is the only one that needs to have the detail added to it. Let's just do some detail on this one. There's a chart there earlier on I had open that had a bump and run on it. Did it not? Was it this one? This one here. This is lovely again, seeing this kind of this price action, historical stuff working out for us, etc. As we've spoken about, as things were happening. So you can see several things happening along the way here with regards to these lows. This could have potentially have this could be described in a number of ways. This low area overall, we put it inside of a triangle. It was a bit of a rectangle as well. I'm not keen on the rectangle. I think when patterns have got no, when they're rectangles, it's a bit like, I don't know, it's just a range, isn't it? I don't like, a rectangle implies it's got two vertical sides on it. I think that's a bit silly, just describing a range. A parallel channel, sorry. So then we've had another parallel channel along the way here. At the point here, we've had these three tops, but this overall price action, including this lower area, this high, and then this most recent price action has been assigned, you could say, this overall ascending triangle point of view for it already by us in this TA today, and that gives us a broad point of view that like if we can break above here. Now we can see with the Donchian channel showing us that at times we're seeing the wicks pushing up. I described this in the Donchian channel how-to video, which may or may not be available. It might be for patrons only at the minute. What we want to see happening here is the bodies actually breaking past this zone. So we need to see the bodies pushing past it. 4-hour time frame, we need to see the bodies at very least close above this price point of 462. Boom, then we get a nice potential for us the next sort of zone up the way, looking up again towards 480. But everything's been going along swimmingly, doing exactly as we wanted it to see happen. So in terms of this one, we're really concerned with, I suppose you could say, the potential for weakness on here. And we described this, and I'm going to just kind of depart from what we've been talking about so far. I hope all the noobs out there don't mind too much, but to go back to something that we talked about in the past, which is less noob friendly, is the DMI over here. And I did want to bring this back up, after the time that we talked about it, because we always like to look back and be kind of honest. There's no point in lying as a trader to yourself. That doesn't get you anywhere at all, and I've kind of carried that over to my presentation here in YouTube as well. Let's look back and say, what do we have in terms of this thing here? And we can see that there was this inflection point. And is it fair to say that we've experienced the sort of the coming back down to this zone again, having we talked about this zone in the background as being important in terms of showing us volatility, and when the party stops, well, then that's often where prices come back down to. Have we done it in terms of having had this inflection here? It's not been so clear, and I just kind of wanted to point that out. I can't really provide a distinct answer. I mean, we could have had it with this wick here. If we do see the prices drop back down the way, though, then I am looking and going to say, well, oh, we should have seen this, shouldn't we? In terms of this volatility guy over here, we've not quite got into the blue territory. In terms of ADX, so if the ADX makes it into blue zone, then we can maybe consider that to have happened. In terms of just really, it should be measured from the top of this down, this red candle to this then fulfillment of it at this red candle over here, maybe, or maybe actually we're looking at this sort of 417, 418 area and saying that that's where it could come back down to the 50% area between the highs and the lows over here as well. So the perfect sort of retrace zone if we do see that happen. So 446 down to 417, that's a potential for us. That's what we're talking about. That's only a 6.5% move, but it's more than enough in terms of trading, even just on spot. bought just to be happy with. So there you go. So that's something to consider. And why would you be considering that? Well, like I say, if we don't see this moving into the blue territory in terms of the ADX here, and that's what all eyes are on right now. Could this be a nice setup for a move? Absolutely could be, but we're waiting for this to have had its sort of fulfillment here, because there's the two story against one. You've got the cross over here, but that happened during this period, which we're describing as having that potential reversion characteristic towards it, and we're just waiting to see then how it's actually going to pan out. And that's just where we are in terms of the micro on this one. Okay, so that's to keep things nice and honest and above board and all the rest of it. There's just sort of the self auditing on that one, and that describes the story of this test in this zone and the retracement against our most recent rise up the way, and isn't necessary to be like to draw patterns around it, etc. And that would just overall describe the consolidation within this range. But then having put in a subsequent higher low at that point would be fantastic. Now that's quite sort of predicty, and I don't really like it, because what we're seeing is that the prices are at an area where really all they need to do is push on a little bit, close up above these zones, and then it's kind of off to the races and we can forget about it. But what I'm really talking about is the concern that you might have, because at this point, at this stage into the episode, what we're talking here, 59 minutes, so if you've been with me the whole 59 minutes, then it's good to kind of maybe carry this forward yourself and kind of think about it yourself, how you could have analysed all of that from what we did in the three sort of previous examples to go any further. And this is just a conversation for folk who kind of understand what I've been talking about with regards to the DMI recently. Are we going to see this push into the bullish control zone? You can see why I've got this set up here with it being 65 for where I have it at. You know, you can see the amount of rejections we've had recently. Likewise, towards the downside, you can see why I've got the bearish control zone set to 35 on this one. So you can see that's just exactly in this range, and that describes the exact concept I'm having here with the charts, right? Or with the conversation that we're having with regards to charts here is described perfectly in what we're seeing here with this. When we had the 50% retrace in terms of the RSI coming back down to the neutral line over here, is that the fulfillment of this story already, or will we see that potentially happen again, but not in terms of necessarily being represented like that on the RSI, perhaps coming down towards one of these zones, for instance, and then kicking off from there and breaking into the, you know, and that's how this is going to go. And that's just like a describing this over the period of the next sort of like, you know, 16 to 36 sort of hours type of price action. And that's really not necessarily the detail that people need on YouTube. Right, cool, okay, nice one. So let's just go back to the chit chat instead and see if anybody's doing anything decent. People are talking about getting their stimulation checks, so they all get stimulated over there. That's cool that America is fully stimulated. So much less of the stimulus has gone to crypto this time. Well, maybe some people have got bills to pay, or maybe it's as a representation. I mean, percentage wise, obviously, if you're talking about chucking your similar size bucket of water into a much bigger ocean, then obviously the percentage representation of that would be much lower, etc. That is true in a way. Less going in front of that's cool that you are all having that chat in there. Good to see it. Don't use BNB staking platform that has been not been audited. Yeah, man, that BNB staking thing that you shared in the Discord, I thought that has vibes of too good to be true. Ponzi about it. Right, yay, I like this show, says Randy. That's quality. Right, so right, cool, that's it, cool. So everybody's dead happy. We've covered everything that we wanted to talk about. Craig, nice to see you. Thanks for becoming a member, by the way. Really do appreciate that as well. Anybody else looking to support the channel, there are two sort of the classic ways of doing it. You can do it on a small scale here on YouTube itself, and that's great because people coming along get to see, oh hey, they've got a wee icon there, this channel's legit, etc. So massively appreciate everybody who endorses me like that, and that's why I feel like that's like an endorsement. Then if you want to sort of support the channel in a way, you can do that with Patron, and then if you just want to sort of, you know, support me directly, then there's the donation links, and the crypto one's great because it's crypto and blah 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 blah, all that good stuff. Really do appreciate all of that massively. And that's me. I kind of caught up with people. I looked at Binance for the first time this weekend. It looks like a mess to me, not to the most intuitive to use the platform, I thought. And that's funny evolution of Binance, because it kind of started off there in terms of being much more simple than it is these days, which is interesting. Although it is, I think its color scheme and layout and all the rest of it doesn't make things particularly easy to follow along with. But hey, who am I to judge with these colors I choose to use on the show? Who knows? And then this, and then it's one of the things about it is that you might be making a comparison between it and a futures platform, exclusively a futures platform. So the comparison between, say, it and Deribit lends itself quite nicely, because you're both looking at charts, putting on orders, etc., except of course you're not trading with any spot trades there on the old Deribit. It's all futures, and that maybe makes a difference comparing it with other places where perhaps Bybit, which is kind of like the futures exchange with like the similar sort of color scheme ish to Binance, but gone for futures and still try to make things really try to make things obvious for people, and they do it sometimes in a way where you're like, why are you making it obvious like that? That makes it counterintuitive. Why are you bringing that? But then at the same time it's good. There's other places that you can do things where you can, it depends on how you like to trade. So long as you get the option to like put in some numbers and some other numbers and hit a button, you're pretty much good to go most of the time. So cool, nice one. That sounds like a big deal. Wonder what that was. Chin chin, Craig, cheers, thanks very much. Nice salute, buddy. That siren sound should be your donation alert, lol. Should be, right? Cool, excellent. Well, everybody, so I feel like we've come to a natural conclusion of the show. Nobody's asking me to take a look at any coins right now. Maybe there's something that okay, cool, we've got a question coming in. Nice one. So nice one. Dude Man says, hey Rocky, can you talk a bit about leverage trading? When is it appropriate, or how to approach it in a responsible way? Okay, cool. So there's several ways that you can approach it responsibly, one of which I was actually talking about with a good friend earlier on today, and that's called hedging. Now, for instance, imagine you had a portfolio that you had $1,000 worth of some coin. Let's bring up a coin in the background just to have something interesting to look at. Let's bring up one of the ones that we spoke about on the channel. Let's bring up one of the ones, for instance, that Jamie TradeSpotting gave a shout out to everybody to take a look at back in December. Let's see this one here from December. What price point was that? Oh, so Jimmy brought it up in it around about December. Where's December at on this one? Around about here. The prices back then were 0.005. Yeah, they were half a cent back then. Nice one, because it's 20 cents now. I'll just leave that up in the background. So leverage trading, say you had a position then, and you thought to yourself, oh, this might go down in price. Oh, I think that there's a good, it really will go down in price, but I don't want to sell all my spot stuff there. Perhaps tax implications given where you might live in the world, or perhaps there's just hassle implications, or perhaps there's the strategic kind of point of view of things, and perhaps maybe even you want to kind of like make money, additional money, etc. So you might think to yourself, well, how could I hedge against that risk of the prices dropping down the way? And the most sort of straightforward way to do that is to go and take a futures position trade against yourself. And one of the benefits then of leverage is that, of course, that you don't need to use the same amount of capital that you would need to do in order to completely cover your otherwise long position in your spot account. And then, of course, if the prices do retrace somewhat, and we could be looking at this and saying, well, maybe you could have done that if you had a big old stack of one coin. You could have shorted it in around about 22 cents, thought to yourself the prices might drop back down to 18 cents or so. We've seen lows today, or 19 cents, for instance, 22 down to 19.2. So you could have said to yourself, well, maybe the prices will drop 10% here, and I want to sell everything I've got in my spot account. But I also think that would be silly, because I want to keep what I've got in my spot account. I'm so conflicted about this, but I'm pretty sure the prices are going to drop 10%. How can I resolve that situation? I'm just talking about this from the point of view of course, the sort of the somewhat savvy retail investor. That's a really good way of doing that. There's other advantages as well. For instance, in terms of just risk if you're one of the types of people, for instance, who thinks about putting their cryptocurrency onto an exchange to trade with, say for instance you were versus kind of keeping that themselves in cold storage and the risk involved there, there's another responsible use case for leverage. If you're sure about a position and you're able to manage your risk properly, then of course you can use a smaller amount of your capital in a leveraged way and keep yourself completely removed from an exchange. So there's another. So in terms of I want to really be responsible, and I want to introduce this thing which is kind of tantamount to the most to really to being irresponsible. How can I approach it in a responsible way? There's plenty of paradigms that you can use to do that, which you might not find kind of mentioned elsewhere, because I suspect your question was really to do with how can I be responsible about kind of increasing my exposure to the markets, having successfully taken on some spot trades and looking to increase my sort of exposure on any given trade, perhaps that sort of thing. And I would like to caution you against that, using your entire account to trade with type of philosophy that might come in there. If again what you're thinking is I'd rather use a bit of leverage to really minimize the amount of my overall account that I have to use, then okay, bear in mind that makes perfect sense. Then bear in mind then that you will be paying fees on the entire position size, not your margin that you appropriate for that you apply to that trade. I'll struggle for a word there. So there's that as well, which is worth bearing in mind, in things you might want to go up and look up again if you want to find more information about them. But I've already spoken about these things on the channel in the past. Then there is then there's just the general sort of rule of look at the true range on an asset. This one here, you're looking at moves which are between the on a 24-hour time frame, 24 candles. Here's a candle and it goes up 32%. Okay, here's a red candle and it goes down 22%. So if you were 10x leverage on a move there and you had used isolated, which would be recommended to new traders as well, and you're looking at between isolated and cross. Now I've got a video as well about the differences between those. I've spoken about this in detail in the past. You would be liquidated after the prices had moved 10% against you, if and the prices went down 22% there. So you're looking at the true range and saying, well, 5x would have been liquidated as well. So what is a sensible leveraged amount? And I think that you need to remember your own greed here is what's really you're trying to the conversation that's happening ostensibly is between you and I at the minute, but actually it's between me and that part of your kind of cerebral cortex that wants to reason with the other part of your brain. There's a third person in here, and that's that greedy part of you which is underneath the surface there. Now how about you tell that greedy part of you that compared to trading with spot, going with like 1.5x, right, would be trading with 50% more than you were previously trading with. You've already increased your amount by 50%, okay, with just 1.5. 2x is 100% more. That's 100% more. If yesterday you made $10, if you were trading with 2x, you'd have made $20. Okay, so chill out. Right? And then if you look at the slider on there and it says 125, how can I get an answer from Rocky which is going to satisfy these two parts of my brain here and still be able to slide that slider up to 125x and somehow call it being responsible? You won't. Okay. And taking a look at the chat here, what I can see is that there's been no subsequent questions coming in here. I hope that was a good answer for you, my friend. I do try to get feedback on these things. If you let me know before I say absolute cheerios, then that's fantastic and all the best with that. But I'm about to say cheerio right now here. So just to give a shout out to Dude Man, who was the one that asked that question. Craig, cheers buddy. Trade Spotting, thanks so much for tuning in. K King, Kevin, good to have you here this evening. K Doc, good to see you. Randy K, good to have had you. Peter Hewer, thanks so much for tuning in. Scott Jones, you are a great great man. Thanks so much for tuning in. And scrolling back up the way, who else? QQQ. And that will do for this evening in terms of the reverse roll call. So thanks so much for that. Just check in real quick, see Dude Man hasn't said anything. Okie dokie, fan dabby dozy. And as we like to say around these parts at times, smash the black. Fail. I actually was meant to smash the black there, but I hit it on the YouTube browser window instead of the Streamlabs software, so need to get a bit practice in on that one. But it gives me a good opportunity to say